How's everybody doing? Welcome back to another episode of the Banker Next Door. I am your host, Dr. Joe Berquist. Today, I wanted to bring everybody an article from Cornerstone Advisors, basically around Chime. Chime's marketing budget was recently disclosed as part of their IPO, going through that whole process. And we learned some very interesting things, and it brings some very interesting information to banks and credit unions. You know, how should you be thinking about your marketing budget, and how should you be spending your dollars? Should banks and credit unions be spending more than what they're currently spending? So I want to bring this article in because I thought it was really great and really shows us kind of what's going on with a fintech versus a bank strategy today. So this article is called "You Don't Need a Chime Marketing Budget to Make Smart Marketing Investments." So with the recent S1 filing of Chime to go public, which was made official this week, trading under the ticker Chime, CHYM, the industry was finally able to get a glimpse behind the curtain of one of the most successful fintech companies in the US. Some interesting stats include 8.6 million active customers as of March 2025, a 23% year-over-year increase, $1.67 billion in revenue in 2024, $251 in average revenue per active customer. So $251 in profit for each of their active customers. But one number really grabbed my attention. Chime spent $519 million on sales and marketing in 2024. This led me to the question, do banks and credit unions with stronger growth rates spend more on sales and marketing than others? And the answer appears to be yes. So using regulatory data for banks and credit unions between $1 billion and $10 billion in assets over the past 3 years, I compared deposit growth rates to marketing spend. And then there's a little blurb there that says read marketing, advertising, and promotional expense as a percentage of both operating revenue and a percentage of non-interest expense. So we could see here, the first one here is for credit unions, and we could see marketing spend as a percentage of non-interest expense. And it's basically broken up by credit unions with top quartile deposit growth, which is in green. And then we have industry median, which is in kind of the dark blue. And then we have credit unions with bottom quartile deposit growth is in the light blue. So basically marketing spend as a percentage of non-interest expense, your best credit unions are basically spending 4%. Marketing spend as a percentage of operating revenue, they're basically looking at around 2.7%. So now let's look at banks, and this is 1 billion to 10 billion in asset size banks. So we've got basically the banks with the top quartile deposit growth. Marketing spend as a percentage of non-interest expense is basically around 2.7%. And marketing spend as a percentage of operating revenue is about 1.8%. So, so definitely a lot lower than what you're seeing from credit unions. So credit unions, and again, we're just looking at 2024. So credit union, again, in 2024, as a percentage of non-interest expense, 3.8%. versus banks at 2.7%. And then we've got marketing spend as a percentage of operating revenue in 2024, credit unions at 2.7% and banks at a measly 1.8%. So, and the article continues here. So in each instance, institutions with top quartile deposit growth consistently had a higher relative marketing spend than the industry median, and those with bottom quartile deposit growth over the past 3 years. So what does this mean? What does it tell us? Well, if you're the head of marketing at a bank or credit union, you now have some ammo to take to your next budget meeting. But is simply spending more on billboards the silver bullet for growth? If you are one of those stingy banks that don't shell out a dime for marketing, it might help some. The objection is coming through loud and clear. Tristan, Chime is a technology company and not a bank. We can't spend like them. True, but SoFi is a bank, and let's look at the stats for SoFi. So now the author here is making the argument that, okay, he's putting it out there saying, hey, I'm not a fintech, I'm a bank or a credit union. I'm not a fintech company, so I can't spend that kind of money. And he's saying, yeah, okay, well, let's look at another example here. Let's look at SoFi, who was a fintech company, but is now a bank. So let's see here. So for SoFi, deposit growth marketing spend to operating revenue and marketing spend to non-interest expense, we could see that these categories, the numbers are going down, but still very strong. So in 2024, SoFi had deposit growth of 37.7%. Marketing spend to operating revenue was at 27.9%. And marketing spend to non-interest expense was 40.6%. So obviously dramatically higher than where banks and credit unions are currently at. So should a bank spend 30% of its operating revenue on marketing to drive growth? Of course not. It would be out of business in a year. Yes, absolutely. But what this does show is that success in today's banking landscape may require banking leaders to rethink the role of marketing and how it will have to shift to meet the new realities. It's no secret that the industry has been going through digital transformation for the past few years. And while a ton of investments have been made in digital, the transformation part is still lacking at most institutions. So what needs to transform is the way banks operate and do business, and that includes their marketing capabilities. Companies like SoFi and Chime have paved a compelling path for growth and shown that the high-performing bank of the future may need to begin operating and spending to a degree more like a tech company that offers a banking services than the legacy model of yore. Of course, the path is not traversed overnight, but follows a continuum from the bank whose marketing plan includes turning on the open sign to that of SoFi, Chime, etc. Now, here's a very interesting chart here. So on the one side, we have high, future ready, and on the bottom we have non-existent and low. And we have on the left-hand side we have marketing capabilities, and on the right axis we have relative marketing spend. And so at the bottom here, non-existent low, it says come in, we're open, and then we're moving toward banks and credit unions today meet banks and credit unions tomorrow, which are still below where Chime and SoFi are currently at. They're at the far end of the spectrum in the the high future ready. So to compete with these tech-driven leaders, banks and credit unions will need to begin building capabilities to move up the continuum. Here are the three things they can do to prepare for future-ready marketing. So it says, number one, get your data in order. Number two, invest in marketing automation. And number three, deliver a rock-solid origination experience. So what do they mean by this? So get your data in order. Number one, most banks and credit unions are sitting on gold mines of data, account behavior, transaction history, channel usage, but it's fragmented, stale, or inaccessible. This hampers everything from campaign targeting to measuring your return on investment. Data is the foundation of effective digital marketing. Without clean, connected, and real-time data, even the best campaigns fall flat. Tech-native companies like Chime and SoFi don't just guess, they personalize every touch point based on rich behavioral and contextual insights. Institutions that get their data houses in order shift from spray and pray to precision marketing that speaks to the right customer at the right time in the right channel. Number two, invest in marketing automation. Marketing teams are often small, overburdened, and manually managing too many disconnected tools and campaigns. This leads to inefficiency, inconsistency, and missed opportunities. Tech companies don't send one-off emails and hope for the best. They build scalable journeys that are automated with always-on campaigns that nurture leads and drive conversations without constant human intervention. Marketing automation tools empower an institution to amplify its marketing impact with the same or fewer resources, turning the marketing team into a force multiplier. And then finally, number three, deliver a rock-solid origination experience. So banks and credit unions spend a lot of money to attract potential customers. Unfortunately, too often, prospective customers looking to open an account or apply for a loan are lost to a clunky, multi-step, paper-heavy onboarding process. Marketing doesn't end when someone expresses interest. Tech companies obsess over onboarding UX because they know every second of friction costs conversations. A seamless digital origination experience is the difference between turning interest into revenue and a wasted budget. With a rock-solid origination experience, bank leaders can protect their marketing investments and ensure that interest turns into funded accounts, approved loans, and loyal relationships. Community banks and credit unions don't need Super Bowl budgets to market like Chime or SoFi, but they do need to start thinking and acting more like tech companies. This means harnessing data, automating where possible, and delivering frictionless digital experiences. Leaders who execute on this strategy will compete and grow. The ones that don't, they'll keep buying billboards and wondering why growth is so hard. So again, I think this is a phenomenal article. It gives you great insight to where companies like Chime and SoFi are at right now, what they're actually spending on marketing to attract customers. Now, I will tell you, devil's advocate here, one of the really interesting things with Chime is that a lot of people have said that, Chime is not going to be able to continue spending this much money in order to continue attracting and acquiring customers. I agree with that 100%. I think their model will have to adjust now that they're a publicly traded company and now that maybe things are operating a little bit differently for them. But while they are in kind of high growth mode, for the short term on the time being, they may have to spend that kind of money. Now, and again, when we go down to what banks and credit unions are spending here again, I think for banks, 1.8%, your marketing spend as a percentage of your operating budget. Really, 1.8%. I think that needs to change. I think the way that most community banks and your smaller credit unions, the way that their marketing needs to change. We are now in a digital marketing world, meaning that you really have to step up your game. If you don't have an in-house marketing department, then you need to go out and perhaps partner with a marketing firm that can do the type of digital campaigns that you're looking for, and basically help you to better market to the different demographics or the different customers that you're, whether you're looking for boomers or Gen Z or whatever the case is, they can help you do those targeted marketing campaigns and get the ultimate results that you're looking for. But definitely a lot to think about in this article, a lot to think about in terms of, what you're spending, what you're getting in return for that spending, what your strategy is, maybe things you could be doing a lot better or things you need to start looking at. So again, I thought this was a great article. I thought a lot to think about here. So just keep this in mind. Next time you're in your marketing meeting at your bank or at your credit union and you're talking about, okay, how are we going to market to these customers and what are we doing and how are we doing it and how is it effective, is it not effective, what are we spending on it, does that spending make sense, should we be spending more? I think hopefully a lot of those great questions will come up in that discussion. But with that being said, I will wrap up by saying if you like this episode, please make sure to like, share, and subscribe. That always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, make sure to check out some of the other content on the channel. I hope everyone has a great day out there. I'll see everyone again real soon. Thanks a lot.